Welcome back to this channel for practice problems for actuarial exams. My name is Krzysztof Ostaszewski. You can find information about me at smarturl.it/Jedi. My advice on how to pass actuarial exams is at smarturl.it/pass. I direct the actuarial program at Illinois State University. You can find information about it at smarturl.it/actuary. If you would like to make a tax-deductible donation to support our students, please go to smarturl.it/help ISU actuary. Here is a problem for Exam FM on financial mathematics, previously posted as my exercise for Exam FM May 28, 2005. Mr. Ronald Card buys a building in New York for $2 million by making a 5% down payment and borrowing the rest from the Midwest Cornfields Life Insurance Company. The mortgage loan from that company is at 6%. It requires level payments of principal and interest at the end of each year for 10 years, but it also includes a provision that the Midwest Cornfields Life Insurance Company will receive 25% of price appreciation in the building during the term of the loan. At the end of the term of the loan, it turns out that the market value of the building is $5 million, and Mr. Card sells the building. Calculate the difference between the rate of return over the 10-year period received by Mr. Card and the rate of return received by Midwest Cornfields Life Insurance Company. So Mr. Card pays 5% of $2 million down, and that means his initial cash flow is $100,000. He also makes annual payments of the remaining balance of the loan is $1,900,000 at the end of each year for 10 years at 6%, so that $1,900,000 divided by A angle 10 at 6%, that's $258,149.12. At the end of the loan term, Mr. Card will sell the building for $5 million, and if it was not for the shared depreciation clause, he would get to keep all of it as the loan balance would have been paid off. However, the life insurance company gets also 25% of the difference between $5 million and $2 million, or $750,000, and Mr. Card only keeps $4,250,000. Now, of course, that $4,250,000 is the initial $2 million, and then the rest is his 75% of the price appreciation, which was $3 million, so 25% of $3 million is $750,000. So Mr. Card's rate of return must satisfy the following equation, that he puts in $100,000 for 10 years, plus makes the payments of $258,149.12 over 10 years, and that all of this accumulated over 10 years amounts to $4,250,000. And this equation can be rewritten as 100,000 plus 258,149.12 times A angle 10 at that interest rate that he gets is equal to 4,250,000 times 1 plus I Card to the negative 10. So that's this equation again. Now in BA2 Plus Pro, if we enter n equal to 10, present value to 100,000, payment equal to 258,149.12, and the future value to be negative 4,250,000, and then push compute IY, we get the rate of return that he gets as 9.43. Now the amount entered is negative because the regular calculation assumes that he's paying off a loan, but in this case he actually has an asset at the end. He accumulated that much from these payments. So that's why it's considered to be a negative loan in a sense. Now, for the insurance company, the company pays $1,900,000 at time zero, and it receives periodic annual payments of $258,149.12, as well as a final payment of $750,000 at the end of the term of the loan. Therefore, its rate of return must satisfy the equations like this: that $1,900,000 accumulated over 10 years at its rate of return is equal to accumulated value of 258,149.12 payments plus the 750 that is there at the end. And then we can rewrite this as 1,900,000 minus 258,149.12 angle 10 is equal to 750,000 present value of it. And in BA2 Plus Pro, we enter n equal to 10, present value to be 1,900,000, payment to be negative 258,149.12, and the future value to be negative 750,000. Then compute IY, and we obtain 9.74%. And as you can see, the insurance company actually gets a better deal. They have a higher rate of return. And you may wonder how come, and the answer is, well, they are getting payments for all of those years. That's the extra factor that they're getting. So anyway, the difference we're looking for is negative 0.31%, which is answer D. Please remember, this is copyrighted material. Any reproduction in whole or in part without express written permission from the author, myself, is strictly prohibited. All rights reserved. Good luck in your studies and good luck on the test.